In this video, we're going to be discussing the ideal company structure for US citizens who live and work remotely abroad. So a lot of questions are asked about this topic, about what's the best company structure for a US citizen living and working abroad to optimize for taxes and to minimize compliance issues and minimize any issues with the IRS. So my name is Bobby Casey. I am the founder of businessanywhere.io. I've been doing this work for 20 plus years, working with people living outside of their home country and helping them optimize for company structure, tax optimization, residency, asset protection planning, and more. So in this video, we are going to be discussing the best company structure for this situation for US citizens. And first of all, I want to discuss US citizens. You first have to understand that your situation as an individual, because that's very important, is you fall under what we call a citizenship-based worldwide tax system. Meaning, as a US citizen, you file and pay tax in the US no matter where you live in the world. Even if you are a tax resident in another country, you still have to file tax in the US. You might take advantage of some optimizations like the Foreign Earned Income Exclusion or the Foreign Tax Credit, but as a US citizen, you still have to file and pay tax in the US no matter where you are in the world. So you've got to understand with that, there are several loopholes available to you to take advantage of. And for US people living outside of the US as a business owner or doing freelance work or solopreneur, that type of thing, the most common loophole you're going to take advantage of is called the Foreign Earned Income Exclusion. There's two ways to qualify for that. The first way is you live physically outside of the US 330 days in a year, or in a rolling 12-month period to be more precise. So what that means is you can physically be in the US up to, including travel days, up to 35 days a year. If you do that, it's pretty easy. You don't have to do any other complicated things, but you just have to physically stay outside of the US. The other way to qualify is what's called the Bona Fide Residency test. In order to qualify for that, you need to become a resident in a foreign country. So there's a lot of different options available where you can become a resident. I would look at where you enjoy spending a lot of time during the course of the year. A lot of our clients go with Mexico. A lot of them are in Paraguay. We have a lot in Costa Rica. On the Asian side, there's a lot of them doing different things like the Thai Digital Nomad visa. In Europe, there's people doing like the Spanish Digital Nomad visa or the Croatian Digital Nomad visa to take advantage of those things. But ultimately, you want to find a place where you want to spend time. We'll use Mexico as an example here because there are a lot of nomadic people that enjoy spending time in Mexico. So if you qualify and you become a resident, using this example in Mexico, then you have a lot more flexibility on the amount of time you can be in the US. Now, there are no fixed rules on the number of days you can be in the US, like with the physical presence test. However, the general rule of thumb is you want to stay out of the US about, at least 8 months out of the year, meaning you can be in the US up to about 4 months out of the year. So that's kind of the general rule of thumb on that. But if you qualify for the Foreign Earned Income Exclusion on either of those two tests, then for the current year, you can earn about $130,000 earned income tax-free. You still have to file the tax return, but you don't pay tax on your first $130,000. Specifically, I'm talking about earned income. So if you're earning money through, let's say, rental income from properties you own, or dividends from stocks that you own, or some other form of passive income, that does not qualify under the Foreign Earned Income Exclusion. It has to be from a job or a business or profit from your company. That would be what qualifies under the Foreign Earned Income Exclusion. So if you qualify though, your first $130,000 is tax-free. And in addition to that, you also get a housing allowance. If you look at IRS Form 2555 and you look at the instruction sheet for that, which is Form 2555I. You can look it up online. Then you can see at the end of that, there's a worksheet that tells you what the housing allowance is for each country. And you just have to look at where you spend the majority of your time, and you take that number and you can use that for your housing allowance. But let's say on average, it's about $40,000. So if you earn up to $130,000, you can deduct the $130 plus the $40,000 housing allowance. What's really great about that is if you have a spouse or a significant other and you live together, you can pay each one of you the $130,000 or up to $130,000, and you get that completely tax-free for both of you, but the housing allowance is per household. So if you made $130,000 plus $130,000, it's $260,000 plus $40,000, the housing allowance, you can earn about about $300,000 tax-free. So that's a really, really great benefit. However, I want to add one thing to that is because your income is generated from the US, if you receive it as, a self-employed person or from a US LLC, that income from an LLC is considered a disregarded entity for tax purposes. So you're earning that as an individual. You would have to pay what we call self-employment tax, or what I like to call social tax. That is your Social Security and your Medicare and your Medicaid tax, which comes out to be approximately 15%. So if you earn $100,000, even though it falls under your Foreign Earned Income Exclusion limit, so you don't pay any income tax, you do still have to pay the social tax or self-employment tax of about $15,000. There is a way to avoid that though, and the reason I recommend every American that's living abroad should be earning all of their income through a US LLC, because if you earn all of your money through a US LLC, number one, it makes it easier for your clients that pay you because it's simple for them to pay directly to your business bank account. It's a very simple solution for you with banking and payment processing and those types of things. And then if you want to avoid that social tax or the self-employment tax, we would need to create a holding company for you, an offshore holding company outside of the US, because if we have that holding company owning your US LLC, let's say Wyoming, for example, so instead of that $100,000 in profit going from the Wyoming LLC to you as the individual, it would flow through to your holding company, and then you receive your salary from your holding company of $100,000. And because that company is a non-US company, you don't owe any self-employment tax or what I call social tax. So that one hack alone saves you 15 grand a year or more, depending on your income level, but that saves you a minimum tens of thousands of dollars a year in taxes just by taking that one simple hack. So in summary, I recommend US people who are not living in the US, definitely you want to run all your income through a US LLC for simplicity, but if you want to take advantage of optimization to avoid that self-employment tax, let's create an offshore holding company to own your US LLC to save you that additional 15%. So if you're interested, we have what we call our Digital Nomad Kit. You can find it in the links below. Our Digital Nomad Kit, we have a Digital Nomad Kit for both US persons and non-US persons. It's a little bit different strategy depending on where you're from, but it's a total package where it includes your company formation, your registered agent service, your virtual mailbox. We assist with getting your bank accounts open, your bookkeeping, potentially your tax filings depending on your situation. And also you get one-on-one consultations with me where we will work together to find the best solution that is specific to your needs. So if you want to reach out to us, click the links below, and I hope you have a great day. Take care.